we are seeing more interest. It's evolved much slowly than I expected, given how low the correlation of returns are in our innovation strategies relative to traditional growth strategies, and inverse correlation relative to value, of course. And so I've been surprised because I thought institutional investors were looking for those low correlations. In fact, they're embracing Bitcoin faster than they're embracing our strategy, which is even more ironic when you think about it. So crazy, yes, and many commentators out there actually call me Crazy Cathie, and they still do. And they will continue to do so. And I love it. And the reason I love it is there's a lot of disbelief in what we're doing. The stocks we own, if you are using a valuation based on this year or next year, and that's your primary screen in terms of either introducing stocks to a portfolio or sizing them, you'd never, ever buy our portfolios or most of the stocks in our portfolios. And so most people don't understand that we have a 5-year time horizon. Exponential growth in the early days looks very much like linear growth, especially when you're working from a very low base. And so most of the industry is linear in its thinking. Linear growth, that is. We're focused only on exponential growth. If you give us 5 years, the difference between linear and exponential is shocking. Let me give you an example. Last year, there were 2.2 million electric vehicles sold around the world, including China, the largest market. We believe that number is going to 40 million in 5 years. Now, that's almost a 20-fold increase. Most people do not believe that's possible. And the primary reason they believe that is they've never seen it happen. When they thought it was happening, tech and telecom bubble, it ended in tears, which is exactly what they expect our portfolios to do. You have to go back to the early 1900s to see this kind of exponential growth. And take the auto sector. That's where we saw exponential growth caused by technologically enabled innovation. So no one is expecting 40 million. Haircut that by half. We are now seeing some people saying, it might get there, could get there, but nothing like 40. And in the early days, in 2014, the numbers that traditional forecasters were using for EVs in the early 20s were like 250,000. We just did 2.2 million. So I think if you give us a 5-year time horizon and the multiples we attach to companies at year 5 are actually more mature multiples, their valuations are going to come down dramatically, but their growth rates in terms of earnings are going to be exponential. And I think it's that concept of exponential. If you think about our world, if you think about dividend discount models, you talk about Graham and Dodd, what are you doing? Oh, okay, if you have this exceptional growth, you have it for 2 or 3 years, and then you decay immediately to GDP growth, which, by the way, we think is going to be very low, 2 to 3%, until some of these innovations get to a level where they start moving the GDP needle. So the multiples we use are really more mature multiples than we think we will actually see at that time, but we want to be conservative. And so people say with our Tesla is now at a little bit below $700. Our bear case for it in 5 years, meaning no autonomous, is $1,500. So it meets our minimum hurdle rate of return, which is 15% at a compound annual rate. And I know during this correction, we've been in a serious correction for innovation for the last 6 weeks to 2 months. I think we're down 30 some odd percent from peak to, we were down 30 some odd percent peak to trough. what happened because of that correction, if we add up all of our price targets and rates of returns and all that, weighted by position in the portfolio, at the peak, our price target suggested we would have a 15% compound annual rate of return. We're really not comfortable that that was our where we are. In other words, we had had a streak of very good performance, outperformance. After the correction, now the compound annual rate of return that we see is 25%. So instead of delivering a double over 5 years, this is not a promise, by the way, our compliance department would want me to add that quickly. Instead of a double over 5 years, we think we have a triple. And our confidence in all of these platforms and technologies is only growing. And our confidence in Tesla's outlook is only growing.